Hello and welcome. You have tuned into Closing Trades right here on ET Now. I'm Shrishti Sharma and with me is Snehi Shah. And Snehi, definitely those expiry moves coming in on the markets. It's indeed one of those days where we are seeing the benchmarks continuing their move upwards. Absolutely. Because just yesterday we have seen great moves rather, and today we did start on quite a tepid and a somber note, but during the day, look at the move and look at the build up that we are seeing in both the index. And the key to note is that a bit of a recovery in the broader end of the market as well, where the breadth of the market as of now, though it's even Steven, but look at the move in the broader end of the market. There you go. It's the mid cap index that is at an all-time high as well, and even the small cap is perching up almost at the day's highest point. But also let's have a look at some of the newsmakers and as well as some of the stocks that are doing well. So it's a Adani group of counters that are doing pretty well. Other than that, Shriram Finance is one of your top gainers on the Nifty 50 side, followed by Geo Financials, which has done pretty well throughout the week as well. And Eternal, Hindalco, these are some of your other stocks that have been buzzing. The life insurance counters are doing well, case in point being HDFC Life, and add to that list is the telecom space. And well, of course, the outperformer Bharti Airtel is making into the top gainers on the Nifty 50 side. On the back of a city note, it's Dr. Reddy's that is languishing in trade, select IT counters, select auto counters, but shouldn't complain much because in all of these stocks, the decline is not more than 1%, barring Dr. Reddy's when it comes to Nifty 50. But a lot of these counters are buzzing in the broader end of the market. Select cement counters are doing well, like we have been flagging off the kind of dealer inventory that is there and the price momentum that we have seen in the cement pack. So saying good day rather coming in for the markets, but we have to give some bit of a move, and we have to actually tell that some bit of a move could be on the back of the expiry as well, because we have the monthly expiry.
Absolutely, monthly expiry, important day for the markets today. Thursdays are usually very important in terms of the Nifty expiry, and today being the monthly expiry, all eyes were going to be on the momentum of the market, and the big question was whether we could sustain the gains that we've seen in the 2 days before. And not only did we sustain those gains, we've comfortably built above those gains, because 25,500 is the mark that we're seeing on the Nifty right now, almost at the day's high. Over the course of the last 7 days, the Nifty is up 2.5%. So it's been quite a consistent journey, if you could call it so, for the Nifty. Other than the few stocks that Shrishti mentioned, let's also throw some light on Dilip Bilkon. This stock is in focus today because they've received the professional completion certificate. 1,060 crore expressway project in Andhra Pradesh is what they have executed. So that stock is holding up well, up about 2.5% higher. Texmaco Rail, this stock buzzing today from the railway pack on the back of a significant order win worth 535 crores coming in from Cameroon. So good move coming in, more than 4% on Texmaco Rail. And Cummins India, also a stock that's been doing well because they've launched battery energy storage systems. So 1.5% uptick coming in on Cummins as well. Other than that, these bunch of stocks on the back of block deals have been in focus ever since the get-go. Likes of SBI had 8.58 million shares traded in 2 blocks. PB Fintech has 1.1% equity change in 2 blocks. Delivery also 1.6% equity change in 2 blocks. Lots of block deals have been seen in the system, in the market over the last couple of trading sessions. Nestle also 1:1 bonus issue. So lots of corporate action is what we've seen this expiry day. But let's take it across to Kunal, who's joined us in the studio to make sense of the moves that we've seen today. And Kunal, the tone was optimistic. The setup was looking good today. But to this extent, had you imagined?
It had to start with a bang. The day started with a bang with a Shairi. So the markets also...
But the way we are sustaining above that 550 mark.
So the day started with Shairi, and that's why the...
Did you say it is because of your Shairi that we are seeing these moves?
But I think it's a very good move for the markets. The missing factor for the markets in the last couple of days was that large caps were not making a comeback. Today is a classical sign, because you look at the kind of large cap names which have been looking strong, and right from the word go, it was not as if that during the day or midpoint of the day you saw large caps coming back into a breakout mode. It started off with HDFC Bank, ICICI Bank, and that trickled into large cap names like Reliance, L&T. Now you're looking at OMC stocks. I think across the board, Bajaj Finance, Finserv, many of these stocks, variety of sectors are making a comeback for themselves. and the volumes are also on the much higher side. So there could be a dual thing which could be happening today. One, of course, would be the expiry effect, as you guys were saying. I strongly believe so that could be one of the major reasons why the markets have seen many of these large cap names. There could be a blend of short covering also, which one could probably have anticipated because of the slew of negative news flow, which is now abated from the market. So once you see news flows, negative news flows receding, that's the time where traders get a lot of confidence that they start reducing short positions and then start getting more leverage on the long side. So I think we may be going to that kind of a zone. The third and the most important part, we managed to break past about 25,500 mark. This could be inviting a lot of short covering from the option specific front also. So I believe if tomorrow we see maybe another 50 points or 100 points gap up, I think that could be a very good indicator that we are looking at potentially another 300 to 400 points up move on the Nifty.
Another 300 to 400 points of up move is possible on Nifty, is what Kunal is flagging of. But Kunal, the other fact of the matter is the move in the bank Nifty as well. We are not very far, I believe, from its all-time high level. So give us some sense that how do you see the move on Nifty Bank and where is that headed, and especially how the rollovers have been?
So I think we've already are at lifetime high levels, Srishti, on the Bank Nifty. But again, I think today is the day where the Bank Nifty has broken that life highs of 57,050 on the spot levels. Again, the most interesting part is that the rollovers so far, during the day, the mid or the noon when I checked, I think were on the positive side, and this was indicative that there is a confidence from traders to try and carry forward long positions. Now remember that this is the fourth consecutive series on the positive side if we close at current levels for both of these indices, and that could probably be an indication that markets are getting into that zone of high confidence at current levels. So positions rolling over to the next series, short positions being reduced and volumes coming back, large cap names come back. I think that's a classic recipe which one was looking out for.
All right, so that's about Nifty Bank. Well, of course, we have hit those lifetime high levels yet again on Nifty Bank, because do remember that it was around the starting period of this particular month, that was around 9th and 10th June, that we have seen scale past Nifty Bank touching that 57,000 mark as well, and today it's a life high level yet again coming in on the banking index. But one such banking major is SBI. That is indeed in focus on the back of the news flow of a QIP worth 25,000 crores at the bank plans for a QIP, and the sale is likely to be next quarter. And as per sources, we understand that 6 banks are likely to be mandated as the book runners. So this is indeed a big news flow that we are gathering on SBI. All eyes on that. But with this, let's revisit Nikun's take on the same. What does it really mean for the banking major?
SBI has not raised capital after COVID. And COVID forced most of the banks to come out and raise capital. Why do they need capital? You raise capital when capital is available, or you raise capital when growth is strong. In the last quarter, SBI maintained that, look, we have enough and more buffer, I think, in the system to maintain a 2-year growth, which means that wherever we are moving in terms of the projected credit growth, the credit growth has been lower, our credit adequacy ratios are firm, and we can easily continue to maintain that kind of a growth rate. But now it appears that either SBI wants to tap the capital market, which they will in quarters to come, but that is a function of availability rather than need. See, there are 2 ways, like I said, you raise capital. When capital is available or capital ki jarurat hai. I think in this case, capital is available. What will happen to SBI? Banks are valued based on price to book, which is that if you have capital, the price to book becomes better. If they go ahead and raise capital of 15 to 25,000 crore, which is what we understand, and it could happen in next 3 months, the book value comes down. And suddenly SBI banking business will be available at sub 2-time book. That in a sense will give the markets a lot of comfort. Look at SBI this year, look at SBI in last 1 year. It got that post-COVID bulge, but after that SBI has been flat like a pancake, which means that somewhere SBI is this elephant which I think somehow, it is the elephant which really could get ready for a tango dance in the second half of this year. That's my sense. The punchline would be the elephant is getting ready for a tango.
Okay, so that's Nikunj's take on SBI, and that stock is in the red in today's trading session. About 0.5% cut or so is what we're seeing on this stock. Let's move away from that, and the latest greenhouse gas index shows a worrying increase with CO2 and methane levels at record highs. This surge is driving global temperatures upward, fueling extreme weather and threatening food and water security. At the India Climate Summit, carbon efficiency and offsetting are in sharp focus as India and the world race towards net zero targets. On this note, we'll slip into a very short break on this edition of Closing Trades and be right back and discuss more about the trading session we've seen with our guests on the other side. Hi there, welcome back to Closing Trades on ET Now. Markets look good. We've slipped slightly below the 25,500 mark, but not too far away from that. So no problem at all right now. Let's welcome on board Dilip Bhatt, founder at Pedigree Advisory Private Limited, joining us. Mr. Bhatt, hi, good afternoon, and thanks so much for joining us. First up, give us your sense of the kind of market moves we've seen today, the benchmarks, broader markets. Everybody has participated in today's expiry move. What are you making of the market right now? And what is your view in the near to medium term for the market as well?
Well, markets are telling you a lot of things. I think the breakout which the markets are giving, in spite and despite the fact that the valuations continue to look a little more expensive, but very clearly you can't ignore the fact that markets are on their own orbit. And they really are telling us that there is still much steam ahead, left now, the way the markets have moved ahead. My own sense is that the valuations are not very comfortable. So it's an absolute dilemma that how do you really play these markets where the valuations are not on your side, but yet you can't ignore this market because I think investors are buying into it. I mean, ignoring and definitely oblivious of the fact that the valuations can turn against them in the near future. But I would say that, yes, in the short run, it looks pretty good and interesting. Long term, of course, if you're talking about 3 to 4 years, once again, it's very good. The challenge is, how do you really play this market when we feel that valuations are expensive, but market looks to break ahead and continue this journey forward?
Well, yes, that is because today we have seen great moves on the Nifty 50 as well as Nifty Bank hitting an all-time high level. But hi, Jatin. Good afternoon and welcome to the show. Firstly, help us understand what do you make of the markets right now and which are the sectors that are standing out for you, because we are seeing good participation from select financials. The metal counters are doing well. Help us understand, how do you see the picture?
Yeah, good afternoon, everyone. So yes, decisively 5-week consolidation finally broken out on the upside. So that leads to a further rally towards 25,800 from a short-term perspective. Now, having said that, today Bank Nifty is also joining in the party. So all-time high for Bank Nifty as well. So I think the private sector banks are likely to continue their up move. Apart from that, metal space on the back of falling dollar index, that is likely to do well. So metals, Bank Nifty, private sector banks are likely to outperform in this next leg of the up move, or provide support for this next leg of the up move. So keep out a watch on these stocks. Apart from that, auto and FMCG are also likely to join in because there is a scope for a technical bounce back in the FMCG stocks oversold. So that is one. Also, auto is looking positive from a short-term perspective. So yes, there is a whole host of sectors that are joining in this up move. So overall, we could see a broad-based rally going ahead.
Okay, so broad-based rally going ahead is the view coming in from Jatin, and a lot of sectors he believes could participate in this. But Mr. Bhatt, coming back to you, you did say that valuations don't look very comfortable right now. Despite this, you believe that the near to medium term for the market could look good. So if not for valuation comfort, what else is driving this confidence right now?
So, when I say the valuation comfort, one is that even the Nifty EPS growth for FY26 is going to be around 12 to 13, And I feel that it's unlikely to be revised upwards, even in the next 2 quarters. So that is one point to be noted. But I think we all know that 9 out of 10 bull markets are always driven by liquidity. So I think this rally also will not be an exception to that. So I think there is enough money floating in the market, particularly with the kind of mutual fund figures that we are seeing. What can really slow down this momentum possibly is how the FIs are going to behave. And they have been intermittently selling also and buying also. So that is one factor to be noted. But I would say that yes, by and large, the retail, the HNI seem to be a little more fearless. And even the cash levels with the mutual funds have come down, indicating that they have really bought into this particular rally. So I will say that yes, one has to play this rally in the short run. And it has to be pick and choose. One has to be a little more careful in terms of what are you going to buy.
All right, so that's the take coming in on the markets, but time now to slip into a very short break here again. But before we do that, India's $5 trillion dream is on track, says Road and Transport Minister Nitin Gadkari at the ET Summit on supply chain management. He adds that the country will continue to work on reducing logistic costs to improve the supply chain. Listen in.
Now the way in which our automobile industry is really doing excellent job. In two-wheelers, our 50% production of Bajaj, TVS, Hero and Honda, the whole is export. Even the company like Tata, Mahindra, their electric cars are very popular. Now waiting list is there. And at the same time, in the world market also, the export potential is very high. The dream of Prime Minister to make India as Atmanirbhar Bharat, $5 trillion economy. And now the mission is to make India the third largest economy in the world. I am very much confident that by reducing logistic cost, we are going to increase our export. Actually, when I was shipping minister, we have planned for Sagar Mala project costing 16 lakh crores. At that time, our budget was 800 crore. But by using the strength of the ports, we have planned this Sagar Mala project of 16 lakh crore. And now, up till now, we have completed the project costing 12 lakh crores.
Welcome back to Closing Trades right here on ET Now. Well, a lot of sectors that are buzzing, and we are seeing financials are definitely taking the lead. Case in point being Shriram Finance, which is now higher by 4% at the day's highest point, while the index continues to be in momentum with almost 300 points of gain on the Nifty 50 is what we are seeing at the moment. But one such pocket that is doing very well is indeed the cement counters, because the channel check suggests that those cement prices and demand have softened due to the early monsoon, and the all India average price has dropped by 1% on the monthly basis in the month of June. But what are the other internals? What is the outlook on the demand? Let's go across to Ashesha for all the details. Ashesha.
Cement sector will be in focus today, and that is because early onset of monsoon seems to be impacting both demand as well as pricing across regions. Motilal Oswal has done some channel checks for the cement sector, and they've come out with a report where they say that prices have declined in the month of June on a month-on-month basis by about 1%. In fact, early onset of monsoon, as I mentioned, is one of the reasons, but apart from that, shortage of labor and oversupply concerns in the industry also seem to be weighing on prices in the cement sector. Now, as far as the region-wise reduction in prices are concerned, average cement prices declined by rupees 7 per bag, which translates to about 2% in the southern region. They declined by 1% in the eastern region, although prices have remained constant in north, central and western region. Now, despite the decline that we have seen on a month-on-month basis in the month of June, on a sequential basis, prices have still risen on account of the price hikes that the industry had taken in the month of April and May this year. So, on a sequential basis, Q1 FY26 so far, prices have risen by about 5% QOQ. And this, as I mentioned, is on account of the price hikes that the industry had taken in April and May. Now, Motilal Oswal believes that as far as volume growth is concerned, that is expected to be low to mid single digits on a year-on-year basis in the first quarter of FY26. But on account of price hikes in April and May, coupled with cost-saving measures that the industry has been taking, profitability is likely to increase in the first quarter of FY26. So yes, prices have declined on account of early onset of monsoon in the month of June on a month-on-month basis. But despite that, remember, on a sequential basis, prices are still up by about 5%. Okay, Ashesha, thanks so much for taking us through that. Indeed, the spotlight is on the cement sector today. Select names like ACC, Ambuja, they're trading with gains of 1%. Ultratech is about 2% higher as we speak, so good moves across the cement space. Let's welcome on board Mr. Siddharth Khemka, Head of Retail Research at MOSL. But Mr. Khemka, before I come to you, I want to take one final question with Mr. Bhatt. So what is your view when it comes to the cement space? We've seen a lot of pricing action recently, but with the onset of early monsoon, what's your outlook now when it comes to cement?
Well, I think cement has really been very puzzling because the last, leave out the last year, but previous to that, about 3 to 4 years, we had a very good infra growth. We had a very good real estate growth also, and real estate companies also were doing well. And despite that, we saw that the volume growths in cement were pretty muted, and they could not really improve their pricing. I think now with infra really taking a little backseat, while real estate companies, in terms of their performance, are a little past their prime as compared to the last 2, 3 years. So I still feel that cement volumes growth will continue to be very challenging, and it will be very difficult to imagine that there will be a good offtake. The improvement will be really very good. And on the back of it, I think even the prices also will possibly, in the sequence of things, will follow the same. It may not go up very much. I think the softening inflation and the cost possibly will help them to maintain their operating profit per ton. As such, I would say I would not be so bullish on cement, and I would wait and watch, not be in a hurry to commit in this.
So that's the day coming in on Cement Pack with Mr. Bhatt. With this, we'll let you go on that. Thank you so much today for taking the time out and speaking with us. But Siddharth, we have you with us on the show, and it's your report which has been highlighting that how the early onset of the monsoon is impacting the pricing as well as demand. But Siddharth, cement as a play is very regionally distributed. There are select companies which are strong players in the southern region, select cater to the northern and the northeast part as well. Give us some understanding that what's your medium and long-term outlook on this particular sector. Along with that, which are your top bets within the sector, if you can flag it off for us?
Definitely. Thank you. Good afternoon. So if you look at the overall cement pack, I think this year we are expecting about 5 to 6% volume growth, which would be you can say a medium growth for cement as a pack. But what essentially we are also looking at is improving realization and lower costs. So stable fuel prices and cost optimization efforts taken by companies across the board, that is helping improve profitability for FY26. So clearly what we see is that margins, even in last quarter, we saw improving, but we expect that trend to continue. FY26 start, we saw a slightly weak start to FY26 due to unfavorable weather conditions, also slowdown of activities, which is now picking up. If you look at the government capex, that is now up in full stream, and hence demand is likely to improve. Companies which are large and pan-India based, for example, again, Ultratech, which is the largest, is likely to sharply outperform the industry despite being the largest, with a volume growth of about 8 to 10%. And some of the mid-sized companies, for example, JK Cement, we are expecting a 12% volume growth, again almost double of what the industry volume growth is. So selectively, I think there are pockets where volume growth will be strong. Pricing pressure is relatively lesser, and hence we are seeing sequentially pricing improving. And finally, some of the cost optimizing efforts leading to higher profitability.
Okay, so that's the take on cement. Let's move away from cement for a bit. And Kunal, give us your sense on Nifty Metal, top sectoral gainer today. And year to date too, it's done pretty decently for itself. It's the third topmost sectoral gainer if you take a look at it on a year to date basis. We have some consistent moves coming in. So at least on the charts, how is Nifty Metal looking to you, and what are some names that you prefer from this pack?
In fact, this could be a breakout for metal index on the weekly chart specifically. So, assuming if we close on the metal index at 9,550 plus mark, where the index is right now, this could be a major breakout, almost like a 8-month or a 9-month breakout for the Nifty Metal Index, and this could augur very well for the entire sector, and especially the stocks which were waiting for a breakout, which were inclining towards a breakout, but the breakout was not coming out for many of the individual stocks within the sector. So I think this should probably act as a catalyst. Now, what we should be looking out for is the larger, the stocks within the entire metal pack which have done reasonably well. I think in that sense, Tata still ranks to be one of the better names. The stock has crossed back about the 150 plus mark quite convincingly, and now I think today, looking at the stock heading towards a momentum zone breakout of that 160 barrier also. Sale is something which has started to look attractive, especially with the breakout of that 130 mark. JSPL, Hindalco today is doing decently well, and the stock is completing a bullish flag formation. The only concern over here from the entire metal pack would be JSW Steel, which I would still believe could probably be a slight average performer to an underperformer, especially looking at the break of that correlation the stock had in the last 2 months when there was a very sharp correction for JSW Steel.
Right, so JSW Steel could be the outlier here, but other than that, the index on and whole is ready for a breakout and has already given one. But Siddharth, help us understand what, as per you, is driving this particular rally in the metal counters. But because when we look at some of these base metals, be it copper in the international market, yes, that is doing well. Zinc is a little volatile. Aluminium is not holding that well. Yes, it is going up, but in a staggered manner. So, other than this, what are the other factors as per you that could be driving this particular move in the metal stocks, as well as along with that also give us some sense that within the metal basket, any particular segment or any particular base metal that looks the best to you?
Yeah, so if you look at globally, two major factors are driving metals today. First is the dollar index, which has fallen below 97. I think that is driving positive sentiments for metals globally. While the base metal prices may not have moved up, but at least sentimentally, that is a big positive with dollar index coming down below 97. The other factor is that the US, the reciprocal tariff deadline is approaching fast, and they are yet to do any major trade agreement. So what we are also hearing news flows is that this could be renewed, or this could be the current tax tariffs could be extended. So the window could be extended, which could mean positivity again for economies like China, where the demand is largely driving the metal prices. So these are two global factors which are driving metals. If you look at from a domestic perspective, ferrous we believe would be largely positive. Within that, Jindal Stainless and Jindal Steel and Power. These are our two preferred picks where we see upside of 20% upwards. While on the non-ferrous side, Hindalco is our preferred pick. We have a buy rating and a target price of 790 there. That apart, if you look at again copper and zinc and silver prices, that is moving up, and towards to benefit that, one can also look at Hindustan Zinc or a Vedanta as a tactical play.
Dollar index, how can I forget that? That's been one of the key indicators. And yes, the kind of slide that we are seeing is indeed fueling the rally in the metal counters. But so does that mean that some of the other related sectors or correlated sectors with respect to the moves of dollar index, be it pharma or IT, can they take a back seat for some time?
IT, I think there have been several other factors. While the US rate cut is now eluding, with Fed saying that they will wait for the tariff impact to take place. I think the tax cut in US, that could be a big positive for the discretionary spending on the tech side. Even overall, we are seeing that while the large cap IT companies are still struggling with the new order inflows, the order book is pretty strong for tier two IT players, which are present in niche segments in the digital AI segment. And there we see strong growth. So purely in the IT, I would say yes, overall view is a bit of underweight, but selectively look at tier two IT companies like the likes of Coforge and Persistent, which have a very strong order book, very strong execution, and are plays on the digital as well as the AI Gen AI space. So clearly be selective there.
Okay, so that's the take, but let's move away from that and talk about some BTST closing trades coming in from our technical experts. Kunal, you go first.
So, of course, I think looking at the way the markets have been structured, I will go with buy calls on a couple of names. Reliance Industries is something which looks attractive on the larger cap front, and especially with the stock now nearing a breakout the 1500 mark. So 1540 as a target, stop us at 1460 for RIL, and the other is ICICI Bank. That stock has been a slight underperformer, but I believe with the banking index showing signs of breakout yet again, ICICI Bank could make a very strong comeback. So suggest a buy with 1490 as a target, stop us at 1420.
Okay, so those are Kunal's preferred bets. Jatin, what about you? What's looking good today?
We also have two recommendations on the buy side. First recommendation is ICICI Pru life insurance. So it has broken out from a triangle pattern on the upside. We believe that the next leg of the up move can take the stock higher towards the level of 677. So that is a buy with a stop loss of 636. Apart from that, the capital market space is buzzing. So BSE is a long trade. BSE can be bought after a brief pause in the last couple of trading sessions. We believe that there is a scope for a move towards 3000, 3030 for BSE. A small stop loss of 2760 is suggested for this long trade. So BSE is a long side trade.
Okay, so those are the picks that Jatin is liking at the moment. Kunal, you've picked out ICICI Bank as your pick, but what about HDFC Bank? You know, fresh all-time high coming in for that stock. For the first time ever, it's crossed that 2000 mark. Is this going to make it to your list ever?
Yeah, I think HDFC Bank is also something which I'd actually flagged off in terms of, or had selected in terms of the closing trade, because I think this is a big breakout for HDFC Bank. You know, it's not just a breakout of a psychological 2000 mark or a round figure 2000 number, but it's a breakout of almost like a 3-month or a 4-month of a major consolidation for HDFC Bank. And the stock looked to come back into its prime somewhere at the start of 2025, where the stock moved from those 1700, 1750 levels as a bottom towards 1900 mark, then consolidated over there for 2-3 months approximately, and now the stock is confirming a breakout. So this potentially could be a major swing breakout as well as a flag pattern breakout for HDFC Bank. And now I think one should be looking at not just the momentum accelerating over here, but the stock to scale past about much higher levels from current zone. This could also be one of the other positive factors for the markets, because HDFC Bank has a high weightage both on the Bank Nifty as well as on the Nifty. So the direct impact would be felt on the much positive side for both the indices.
So that's about HDFC Bank, but once it's stock within the telecom space that has been doing well at least for the past 3 days, that is Vodafone Idea, as the company aims to raise fresh capital of $2.9 billion in loans. And on the back of these particular news, as well as the commentary coming in from Telecom Minister, where he's highlighting that he can't have a duopoly in the system, maybe such comments are boding well for Vodafone Idea. But on Vodafone Idea as well, we spoke with Balaji, who is Balaji Subramaniam of IFL Capital Services. Let's go across and listen into his take.
There has to be some relief from the government side, while the company would concurrently reach out to lenders, because the company ideally, if you are Vodafone Idea, you wouldn't want to leave any stone unturned, and you will keep the efforts from your side. But that said, I think for banks to get really comfortable, some relief measure announcement has to come from the government side, because if any lender is looking at potentially lending to Vodafone Idea, I think the first logical question that will come up is, how is Vodafone Idea going to get past that hump which I mentioned, which is the 16,500 crores which they have to pay up by 31st March 2026. So, unless clarity emerges on that front, I think banks will still be a bit reluctant, and that is how I see it. But of course, the company will continue engaging with the banks, and so it has to be some sort of a effort from all three parties, which is the government, the company, and the lenders, especially the PSU ones.
Okay, so that's Balaji's take on Vodafone and the loans that are looking to seek. Remember, they already have 83,000 crores worth of AGR dues pending, and the company has said that they haven't received any official communication from the government hinting at any respite coming from that end. So that's on Vodafone. A couple of other stocks are in focus in today's trading session and are doing well. The likes of Hindustan Copper, again from the metal pack, that's doing well. Some other stocks from metals are doing well. You have bank, energy, FMCG, all of them are doing pretty okay for themselves. On the flip side, what's not doing good is a couple of these fertilizer stocks that we have seen some momentum coming across to them. Jatin, give us your take on some of the fertilizer names like FACT, RCF. You have news flow on RCF as well today. What are you making of this entire fertilizer space?
Some of the stocks of this group like Chambal are not doing well. Apart from that, Coromandel is doing well, EID Perry is doing well. So I think there is a mix of these stocks like fertilizer. So I would rather look at it from a stock specific perspective rather than looking at it from a sectoral perspective. Within this space, we like Coromandel International from a short to medium term kind of a trade. I think that is not doing well today in today's trading session. So as of now, I will avoid this space until we get a further clarity.
On the fertilizer space, select counters are looking good, but overall, avoid is the call coming in from Jatin. But once it's stock that is doing pretty well, and for the past 5 days, if I see that stock is on the up move, that is Geo Financials. And Kunal, if I'm seeing the charts as of now, after the stock did cross that 300 odd mark, it is actually post I think 3rd of Jan is what the stock is hitting such levels. Give us some sense that how do you see the up move?
Yeah, this is a very big breakout for Geo Finance. In fact, rarely do you see such kind of a V-shaped price correction and then a major recovery for the stock. And remember that Geo Finance it was earlier considered to be a very moderate beta kind of a stock. But then there was this sudden change of behavior. The stock from 340 fell down to as much as 200. I think 200 or 205 was the low for Geo Finance, and that's a sharp correction of almost 40% for the stock from its lifetime high levels. And post that, the stock to make a comeback about 300 mark, recover almost 60% of the losses. I think that's a remarkable trend for the stock. I flagged off Geo Finance a couple of days back as a buy. My expectation was that the 200 DMA, which has been acting as a support for Geo Finance, that would be probably a major inflection point in the stock. If it holds on to that 200 DMA, we would probably expect the stock to come back into momentum. So it's come back into that momentum zone right now for Geo Finance, and my expectation is that the stock would start to look even better from current levels. My expectation is that 340, the levels which are hit for Geo Finance in the previous year, those levels should be surpassed if this momentum continues for the entire market.
Okay, so that's a take on Geo Financial. Just a short while ago, we were discussing the dollar trade or the dollar index, and we have more perspective on that from an interaction we had earlier in the day, because the uncertainties in the US policies is pushing investors to diversify their portfolio and not be restricted to US assets. This is the word coming in from Kungo of the ANZ Group. He also talks about the future of the dollar. Let's go across and revisit that conversation we had with him earlier in the day.
Policy making as we have witnessed in the last few months. So that has caused foreign investors to rethink whether or not they want to continue to have such a large allocation to US financial assets. And the answer overwhelmingly is they want to reduce that risk. And that's really the key reason why we've seen weakness in the dollar. The dollar will still be an important reserve currency. I think we are coming to a more normalized period where we're going to see probably further downward pressure on the dollar as global capital gets reallocated to other parts of the world. Global central banks have been behaving. It's quite clear that they themselves are also looking to diversify away from the US dollar. And gold, of course, is one of the ways that they can do that. We've seen a lot of central banks around the world, particularly those in emerging markets, increasing their gold reserves.
All right, so that's the day coming in on dollar index and how the other commodities are behaving at this point in time. But Siddharth, just before we shut shop in today's trading session, and today is also one of those monthly expiry days, and this expiry has been decent for the markets because for the majority part, we were quite range bound. Just in the last 2 days, we have seen a breakout happening. But there has been a lot of sector churning underway. Give us some sense that in terms of the sectors which can be the outperformers in the near term, help us understand that metals and IT and pharma we have already spoken about, but what about the rest?
Clearly, I think the biggest gainer or movers for the market would be the financials, including banks. I think BFSI is the largest beneficiary of the low interest rate regime and the liquidity boost that RBI has been pushing in last couple of months. Even the recent regulation which have relaxed for small finance banks and for the project financing companies, I think those are steps which would only improve the liquidity and lower the cost for NBFC. So I think that is one space which will continue to do well. That apart, if you look at the domestic consumption theme on back of, again, low interest rates, the above normal monsoon, rural sector picking up, I think some of the auto companies, especially if you look at two-wheelers, that can start doing well. So I think these are some of the other sectors to look at purely from a domestic growth perspective.
Okay, so those are the bunch of sectors that are looking good at the moment. But before we wrap it up, Jatin, what are the immediate levels that you see for tomorrow? Where do you believe we'll open?
Oh, definitely. I think we'll open on a positive note. The immediate resistance that we can expect is around 25,750, which coincides with the weekly upper Bollinger Band. So I think there we can face some amount of resistance. So overall view is positive. We are likely to open on a positive note tomorrow.
What about you? Levels to watch out for tomorrow?
I think 25,500, that level is broken today, so we should now be looking at 25,500 as a base or a support. It's a little bit tight, but then I'd probably expect the markets open with the gap up, then that support should hold on. And on the upside, 25,800 is what I would look out for in terms of the index targets.
All right, so 25,500 should act as a base from these levels. So let's watch out for that. But well, of course, today has been a great day for the market, especially the banking index. A lot of these metal counters have done well. But one such other pocket, Siddharth, quickly, if you can help us with your take, is the FMCG basket and especially the staples. Yes, so we are seeing some bit of these agri-related commodities. They are cooling off in terms of the prices. But any particular pocket or stock, if you can help us understand that which is looking good to you at this point in time?
Yeah, so I think definitely that's one pocket which has largely underperformed. And if you look at, again, the volume growth has been pretty dismal. Going forward, things are looking up, but in Q1 also we expect a muted volume growth for the FMCG staples companies. So hence, clearly an underweight view from a near-term perspective. Some of the companies that we do like are more diversified. For example, Tata Consumer is something that we like, has a broad-based basket of products across food as well as the consumption sector, where we believe that demand could pick up and valuations are also comfortable. The other company that we like is Godrej Consumer, GCPL. Largely, if you look at based on soaps and with crude oil price coming off, largely remaining stable, on the margins front looks pretty steady, and in terms of growth also looks pretty steady. So two stocks we like: a Tata Consumer, where we have a buy rating, target price of 1360, which is our preferred pick. Godrej Consumer, again, we have a buy rating, target price of 1450, both giving an upside potential of more than 20%.
Okay, so those are some of the stocks. Tata Consumer and GCPL looking good to Siddharth right now. Siddharth, Jatin and Kunal, thanks so much for joining us on the show. With that, we'll start wrapping up and counting down for the day. Let's take a look at how it's panned out for us today, and absolutely no complaints because we've only seen the shade of green across the board. A 1.2% uptick coming in for the Nifty today, comfortable above the 25,500 mark. And we're closing at the day's highest point for Nifty 50. Sensex to a 1.2% uptick coming in. Day's high for Sensex as well is where we are closing. Nifty Bank, a fresh record high coming in for Nifty Bank today. Amongst that, HDFC Bank, fresh record high coming in for that stock as well. It's closed above, or it's above the 2000 mark, yes, as of now as well for the first time. So 2% healthy uptick coming in on HDFC Bank, along with some of these large private sector banks that have done well. But even the broader end of the market has been rather resilient today. You have the Nifty mid cap and small cap both closing at the day's highest point respectively. Nifty mid cap up 0.6%, underperforming the market. So is the small cap. The exuberance in the small cap space has simmered down slightly today, but nonetheless a 0.4% uptick is what we're seeing on the small cap space. The advance decline ratio is very evenly divided today, so that even though all of that seems good in today's trading session, not all is looking okay, because you have names like Fact, EID Perry, you have Sobha, Prestige Estates, it's the entire real estate, media and IT pack, along with select pharma names that have closed in the red in today's trading session. But given the way the advance decline ratio is spread out today, India VIX is lower by almost 2%. There's a cool off happening on that front as well. Almost a 3% cut now. We're around the 12.5 mark when it comes to the India VIX. So you have metals, banks, energy, FMCG, autos and PSU banks that have closed in the green today. Big winners across the metal board: Hindustan Copper, SAIL, Jindal Steel, Vedanta, Nalco, Tata Steel and Hindalco. But on that note, we'll wrap it up on this edition of Closing Trades. From everyone that put this show together, thanks so much for tuning in.